Trends and issues to look out for in 2022. End of the year is always a good time to start thinking about what's coming up. So Stacy and I sat down and thought, what are the questions that we've had a lot? What are the kind of things that are coming up when we're building programs with people? And what are the kind of things that people should expect in the coming year? So this is in sort of a Q&A format for us. One of the questions that we heard a lot at the beginning of the year, but not so much anymore, a customer member wants to open an account for their CBD business. They sell hemp-derived CBD and Delta-8 THC. So we know that there's already a little bit of vagueness around CBD, but at the beginning of the year, in the middle of the year, we heard a lot about Delta-8. At the beginning, I talked about Delta-9. Delta-9 THC is that chemical compound that makes cannabis marijuana. So what about Delta-8? This is what's called an alternative cannabinoid. So while it's a THC, it is not Delta-9 THC. So there was an argument that a lot of vendors were making. There was kind of this Delta-8 gold rush. They were saying, well, it's not Delta-9, so it's legal. So Delta-8 has similar effects to Delta-9, but it's not as intoxicating. It has a sort of more muted response. And the reason why people were saying it was legal and it was for sale in boutiques and it was for sale online is that it's typically manufactured from hemp-derived CBD. So there was that argument. Well, it comes from CBD, which comes from hemp, so it's legal. The issue here is that it is impractical to produce on a commercial scale without the use of harsh chemicals and other synthetic processes. So this is where it potentially runs afoul of the DEA's position on synthetically derived tetrahydrocannabinols. So the DEA did say if a substance is derived from hemp naturally, then it is not a controlled substance. They said, however, that for synthetically derived tetrahydrocannabinols, the concentration of Delta-9 is not a determining factor. If it's synthetically derived, it is a controlled substance. Probably the reason we don't get that question as much anymore is a lot of states paid attention to the news. A lot of states actually either made Delta-8 explicitly illegal, or they incorporated it into their existing medical or adult use marijuana programs. So it's a controlled substance in most states. There are very few states that just have simply not addressed it. So if you do have customers or members coming in saying, I want to open a CBD business and I also sell Delta-8, I cannot tell you not to do it. Those are always your decisions to make. But Delta-8 is not legal in a very easy way. Like, there are issues around it. Our state might be legalizing marijuana next year. So what do I have to prepare for? Like, what do I have to think about? Well, hopefully some of what we've talked about today can help you get ready for it. But we have a couple more suggestions. You should be aware if legalization is on the ballot in your state. You might be surprised. So Arkansas has a medical program now, but it's very likely they'll have adult next year. So that market will grow. You'll have more businesses potentially coming to you asking about bank accounts. Florida, Idaho. You remember Idaho was one of those states that had nothing. They were in the gray. Well, they may legalize medical next year. Mississippi, there's kind of a long story surrounding Mississippi, but to make a long story short, in the last November elections, Mississippians voted to legalize medical marijuana, but the state repealed it, essentially. So there's going to be another effort next year to pass medical again. Nebraska, another state that has literally no program, is considering medical. North Dakota is considering adult. Ohio, Oklahoma are considering adult. And Wyoming, one of those last holdouts, is considering medical. So even if you're in a state that doesn't have a program and you're thinking, well, we'll never do it, you really might be surprised. We also have states that legalized this year or last year where sales may begin next year. So New York, New Jersey, Connecticut, New Mexico, Alabama, states that expanded or legalized this year may well start their sales next year. So what can you expect when your state legalizes marijuana? just as I said that sales in New York and Connecticut, won't begin until next year at the earliest, you should know that sales don't begin on day one. But things like the real estate market does. There are a lot of opportunities to engage with cannabis businesses, kind of prospective cannabis businesses, before licenses are even issued. So don't wait until you know that there are licenses out there. If cannabis has been legalized in your state or territory, start paying attention to it now. There's also an advantage in developing relationships with CRBs, potential CRBs, before licenses are issued. You get the ability to learn about these businesses, to understand these businesses in a relatively, there's no such thing as risk-free, but a relatively risk-free environment where they're not touching the plant. So they're not technically marijuana businesses. So you can kind of determine whether, based on your relationship with them before licensing, whether you do want to go forward with them as licensed businesses. We see this in states like New York and New Jersey. Do know that licenses are issued in order of where the business sits in that supply chain that Stacy showed you earlier. The first to get licensed are the growers, because there's no legally grown product in the state if you're just getting medical. So you have to grow it first. Then your labs and processors, your dispensaries, then your delivery and consumption lounges. So all of these licenses aren't issued all at once. They kind of waterfall down. And you will be approached by CRBs before licenses are issued to do things like facilitate the payment of application and bonding fees. Some states have things like you have to have $1 million available in a bank account to apply for a license. So they need accounts before licensing. They need to be able to receive investor funds via wires and checks. They need to conduct real estate transactions and build out properties. There are really big restrictions around properties, things like security requirements, air cleaning requirements. Like they can't just go into a store in a strip mall. Like they have to do build outs that are expensive. They have to establish accounts to pay for business services and subscriptions like point of sale software. And they will seek financing for equipment purchases. As you can imagine, any industrial equipment is not cheap, and it is certainly no exception in the cannabis industry. Stacy, are there other things that you would suggest people keep an eye out for, or ways that you can start engaging with the industry before licenses are issued?
I think in terms of opportunity, there generally start to become associations. Like recently, we saw something in Connecticut with a networking event where, as the cannabis industry builds out its adult use program, they're starting to hold some events, and there are consultants getting involved, and accountants are coming to the table saying, "Hey, we're gonna help you with the business documentation." And applications and things like that. So those, as you're watching the market unfold, and if you're looking for the opportunity to make connections, those are great contacts for you to have in your circles of influence around, who's working with these cannabis businesses and what do they need for banking services in this seedling stage before they actually become licensed, and how can you build those relationships ahead of time?
Yeah, that's another thing to remember is these businesses are unlike other small businesses in many ways, but in many ways they're the same. They still need lawyers, they still need accountants, they still need plumbers. Those are also people you can, know are being involved in the industry, and they could be good contacts if you're looking to find these CRBs. Lawyers and accountants are great places to start. Lawyers help them do their applications. Accountants are the ones that, do their books. They're, really good resources.
And, one other thing to throw in, sort of on the opposite end of the scale for the compliance folks that are on the call, if you have those indirect businesses, as a new program comes into your state, you're going to want to keep an eye on, if you've defined those indirect businesses as 50% or more revenue, maybe they were 20% when there was a state legal program for medical, but now that adult use is coming into play, you might need to check in with those businesses to say, is that revenue percentage still accurate? Or, for example, Paul mentioned the plumber, which is what made me think of this. Maybe prior to, they were doing a few medical dispensaries, but now they're going to be expanding their business to put in hydroponic systems for a bunch of new cannabis businesses, and their revenue percentage is going to change from 20% to 80%, which would reclassify them as a direct MRB, and you might want to handle them a little bit differently. So keeping tabs not on just the cannabis businesses, but the indirect opportunities and classifications is important too.
Oh yeah, that's a super good point. Thanks for bringing that up. And that's why we have that, marijuana adjacent or service providers. They're not marijuana businesses, but if you know someone is the plumber that has, one dispensary, like check on them, every couple of months or every couple of quarters, did anything change? Ask them, are you working with more businesses that are marijuana related? Like Stacy said, it might have changed. That's a good point. We found out that one of our commercial real estate owners is renting out a storefront to a marijuana dispensary. What do we do? Just as I said before, real estate is something that is always going to be involved in the cannabis industry. MRBs will need to either purchase real estate or rent real estate. You are going to want to pay attention to real estate activity when a state legalizes or expanded its program. You should be aware that cannabis real estate, Stacy mentioned this, is often sold or leased at a premium. So if you see someone, as a compliance person, if you see someone, like Stacy said, they're renting out to a regular business at $750 and all of a sudden they start renting out the same kind of facility for $1,000, that might suggest that it's cannabis related because there is a premium there that doesn't really seem to make sense for any other reason. So do you have tools in place to detect cannabis-related real estate transactions? How would you find them? Are you doing things like Google Alerts to see if anyone is opening a cannabis business in your town? Do those businesses belong to people that you know you have as customers or members? How you handle existing mortgages to new MRB owners or employees? Are you going to have to change your relationship with these businesses based on the fact that they are now engaged in cannabis? What happens when property use changes from non-cannabis activity to marijuana growing or sales? Stacy just mentioned, you have to track and see how these businesses evolve over time. So what are you going to do when someone who owned a greenhouse was renting it to someone who made, decorative gourds last year, and now it's just cannabis? What happens when a commercial real estate owner portfolio starts to shift? Same kind of thing. One of the big questions is, are you responsible for doing due diligence on your customer's customer? So if you have one person who owns a strip mall and they have one marijuana business, are you required to treat their marijuana tenant as one of your marijuana businesses? I would suggest not. Make sure they're licensed. That is certainly something you could do, but they are not your direct customer. Just make sure that they are operating with an active license. But Stacy, I know that there are things in here, particularly around like mortgages and lending, that you could add a lot of color to.
Yeah, thinking about the type of business is important. I mean, the type of building, I should say, right? So if it's real estate, as Paul mentioned, there's specific build outs that need to happen. So when you're having the collateral appraised as part of your transaction with the landlord, you want to make sure that you are protecting yourself from a risk perspective. If the value of the property is not clearly defined because you have someone who's doing the appraisal who doesn't have experience around cannabis properties, that may have an impact to the value in the wrong direction. Or kind of looking at it the other way, you want to make sure that the value is not overinflated and that that value only exists when a cannabis business purchases the property. For example, if they've got an air vent system and they've got certain security features and things like that, that might actually need to be removed if the property were foreclosed and went to auction, and it might be a detriment to the value overall for someone who's running a business that wouldn't need those particular features. So understanding the value of the collateral is important, and impacting, those decisions might impact loan to value decisions. If you have a landlord who uh, specializes in cannabis properties, maybe for those loans, maybe you're only going to 65% loan to value in order to perfect your lien a little bit around the risk of the value of the cannabis property not being where you think it might be.
All right. We found out that one of our customers slash members just opened a dispensary. They have an auto loan with us. So this is a question that we do get asked, but it follows along pretty closely with what we were just talking about. So Stacy, I will again hand this over to you.
Okay. So thinking about lending in general, this isn't specific to an auto loan, but understanding first, how you will do your due diligence around the direct marijuana business itself. I highly recommend, and I know some institutions don't do this and they have perfectly good lending programs, but I highly recommend that if you're going to lend directly to a cannabis business, that you also have the deposit relationship. Having that deposit relationship is what's going to facilitate the ongoing monitoring, the comparison with the sales results, the filing of the SARs and CTRs, and all the things that are going to keep you in good favor with the examiner community. If you are only doing the loan, yes, you're limited exposure, but if someone said to you, "How do you know this is a licensed business?" or "How do you know that the loan payment that just came in came from legal dollars and not illicit activity?" you wouldn't be able to answer those questions without having the deposit relationship. So think about that in terms of your, building out that relationship in your ongoing due diligence. Uh, Collateral is certainly an issue. We talked a little bit about, bankruptcy and, things that are available or not available for collateral. Obviously, a car would be, perfectly fine as collateral. You could take possession of that. There is some risk if you are working with a cannabis business that is up to no good. Um, and they do get involved in some sort of, federal seizure case if the FBI or DEA or someone comes in and says, we saw this recently in May. They showed up and they took possession of, all of the assets on property. If they took possession of the collateral, and even if it's a car, you need to understand how can I get that back from the federal government? That's my collateral. I need that to um, protect my lien because now that you've seized all their assets, they're not making their loan payment. So there are some protections under UCC. There's a document out there from the Department of Justice which specifies what happens when they seize collateral and there's liens involved. Make sure you're looking at those things and you're having conversations with legal counsel to interpret them and whether or not your lien would be protected or not, whether it's a piece of equipment or a car or a piece of real estate. We talked specifically about bankruptcy and the fact that MRBs are ineligible for bankruptcy protection. So you would need to make arrangements ahead of time as part of your loan documentation that either a third-party receiver could be used or the bank is a receiver or something along those lines so that if in the event of bankruptcy, there's someone designated to take control of the assets and distribute them accordingly. You'll want to think about what types of loans you would be willing to do as a financial institution should you lend directly to MRBs. We've got a couple institutions that are like, we're not ready for the collateral stuff yet. That's a little intimidating, but we're going to do unsecured line of credit for 25 or $50,000. We offer this to our other businesses. We have visibility into their sales activity. We're good. We're going to do that. So you would want, if that was the case, you would want to specify in your credit policy, we will lend to MRBs in this capacity. Real estate loans, unsecured line of credit, car loans, that's it. We're not going to do any equipment loans, perhaps. You decide. Pricing around cannabis loans. The market data that we've seen is all over the place. I saw something recently from MJ Biz that said that the average cost of capital for MRBs is around 9%. That is the average. And that is generally for your larger cannabis businesses, the multi-state operators. Some of your mom and pop shops are paying ridiculous amounts of interest to borrow from non-financial lenders. We've seen, most of the loans are somewhere in that, 8 to 20% interest rate range. We've seen as high as 60%, and that is 60%. We've seen loans from these folks, these non-FI lenders that require ownership rights or warrants to be involved in giving you, I'm going to lend you capital, but I'm also going to take a piece of your business. So it's more of like an investor relationship. So if you come into the market and offer a 10% uh, loan for equipment, you are going to look so much better than much of the competition out there, and maybe even take them out of one of those 20 or 30% loans. It's a win-win for you and for them. Reserves, if you are working with a high risk industry, you're going to want to go back and take a look at your loan loss reserves. Do I need to adjust those in any way, shape, or form? I don't know what the answer is, if you should or shouldn't, but you should at least look at that and have a conversation internally. Um, and also think about concentration limits. How much of your portfolio do you want to lend to this industry in order to protect your risk? Do you have loans to one borrower impact that you need to think about? Because some of these loans can be pretty substantial. When Paul talks about build outs and in new markets, these are ridiculously expensive propositions, millions and millions of dollars. And there's another thing that's not on here that just popped into my head is thinking about participations as well. Maybe you wouldn't be able to handle all that needs to be lent out, but you could find other institutions in your market that would be willing to do a participation loan with you. So thinking through lending is an exercise in it's definitely a challenge to think through all the things we need to think through, but it's kind of fun to figure it all out and decide if this is a market you want to get into.
I certainly think it's fun.
So do I. We're nerds, Paul.
So here we're going to wrap it up. So we know that there are some folks on the webinar that are not banking. Maybe some of them are in that investigation stage. We're ready to start, but we don't know where to start. So where do you start? Well, Stacy, do you want to take us out?
Yeah, absolutely. This is the 2-minute part of the presentation that we're going to pitch a little bit about GreenCheck. What we do on a day-to-day basis is we help our institutions build programs and take you from, I think I want to do this, but I don't know where to go. We have a services engagement. It's a fixed rate consulting engagement where we will walk you through those pieces that you need to get ready to make the decision whether or not you want to bank the industry. So we have a risk assessment tool, 6 categories of risk, 77 points of risk. We'll show you how to use it. We'll help you, we'll have discussion around it and help you get ready to do that. We have the financial model already built. I showed you a snippet of it. We have a session where we talk through what kind of program do you want to build? What market are you in? What's the opportunity? What do we think we want to do about pricing? Do you want to lend? Do you not? So we walk you through that. We have marketing strategy tools and workshops where we'll walk through, here's your opportunity in your market. How do you want to market? Who do you want to market to? How do you want to define your ideal customer? And then we have documents and templates. We have a whole library, which includes a cannabis banking policy template. We have account addendum templates. We have exit strategy templates. We have all of those things that we will share with you as a client to help, prepare you and think about how you want to do this and operationally as well, so that you can go to your board and show them that you've made a thoughtful decision about how you want to enter this industry, if you want to enter the industry, and what that looks like for your institution. And then if you do decide to go forward and you're looking for automation, we have software too, right? So we have a software package that adds automation around your workflows and brings in that documentation and due diligence. We integrate with the point of sale and invoicing systems to pull in all that sales data. We pull in your core transaction data and we present all of this to you in a nice little package in one platform. But we don't just give you the software. We walk you through, okay, let's build a program. Let's put your procedures in place. What else do you need to think about around documentation? What do you need to do for training for your staff and for employees as a whole? Because you want to make sure everybody knows how to react and respond to this industry and the questions that you'll get. We provide some templates on communication plans. What happens if you have a cranky member that comes in and says, you know, I'm mad at you and I'm taking my CD somewhere else, right? Like how do you respond to that? What are your communication plans and talking points? So we'll help you build the program and get you on the software as well. So we're here to help you in any step of this process that you need us to help you with.